Alrighty traders, George here. Time to address some questions about oil, day trading, and the inventory reports. Today, Wednesday morning, we have oil inventories. It's a standard econ report, 10:30 Eastern, 7:30 on this chart. And for day trading, this is the Mount Everest, this period of time around when the oil inventories comes out. The reason being that there is typically an emotional response around whatever is contained in the report, which we don't care what the contents are. There's also the fact that oil is the most expensive market to trade. It's $1,000 per dollar move. So you have this combination of a burst of volatility with the profit or loss potential that oil has, and there's really nothing that compares to it. So this is really quite a test for day trade skills. When the inventory report was about to come out, I was set to go long here and was actually slipped long at 61.50s here. I would have rounded up if I wanted to get in at 61.50 and almost immediately printed a DSR level here. This is all driven by knowing where I want to be long and short before all this goes down. So I want to be long here. Price moves up into the report. Great. I pick up 400 plus bucks on this pop here. I wanted to be short here. Actually got in at 61.83s and picked up another 300 plus on this fade here. And then I wanted to be short on a break below this area if it didn't hold on the breakout. And that picked up another 600 plus. So in 5 minutes, 29s, the 34s there, 5 minutes around the oil inventory report, I picked up 1,510 bucks, 3 trades, 6 contracts, 2 and 2 and 2, 100% batting average there. Now, there's a lot of people that won't trade the oil inventory reports, and that typically comes from a place of fear. They don't want to lose money. Some people have been told that they shouldn't, and maybe there's some good reasoning to that, but really it gets down to what are your reasons. Is it because of fear? Is it because of performance that you've had? Is it fear of loss? Why not have a fear of not making profits? Right? So what can happen with this kind of price action is traders can make emotional responses, and that happens all the time. It just happens to be magnified here. So one of the things I mentioned to all you guys is to think about what the other traders are doing, the other side of the coin where traders are not rules-based and they're going off of emotion. One thing that they all say is, if I only did the opposite, I would have made money. One thing that we have with the DSR model is we know where there are some very key levels. So traders that are short above this DSR, they're saying, if I only did the opposite, I would have made money. If they were long, they would have at least had price moving in favor. Traders that are going long on this break here to new highs, they're saying, if I only did the opposite, I would have made money. Why didn't you go short up here? Traders that are going long here, traders wanted to be long over here before. What about over here? Well, they're breaking below. And traders that are long here, they're saying the same thing as price works against them. So whether it's bigger picture, balance beam, or intraday DSR model, one key driver that is always present is there's always a group of traders, a large group of traders that are saying, if I only did the opposite, I would have made money. You're either following your rules, yes or no. And at that point, then you never think about, if I only did the opposite, I would have made money. Don't always do 100% batting average. Don't always do 1,500 bucks in 5 minutes. But I always apply the same logic using the same chart, same basket of strength of signal, and on to the next day, on to the next week. All right, it's just a matter of execution. It's a learned skill, gang. It's something that you can do on your own, and just some really good belief building for all you new signups this week to see what we were talking about in full-blown action there this morning. So just wanted to give you some insight. This is a really important thing to work out in your trading, whether you have made a decision to trade, not what the contents of the news would be, but literally the timing of when it happens. And make sure that those reasons are all based on what you see. Okay? They've got to be built on what you've seen, not what you feel, think, or hear. Use the link at the bottom of the video. You can hop in the room, see me day trade this market as well as some others, and do some big picture analysis. But that'll do it for now on this oil inventory day. We'll see you back in the live room.